and good afternoon to everyone. Thanks for tuning into this webinar on Legrand's project evaluation tool. Today we'll hear about Legrand's sustainability journey and how we've used the project evaluation tool to identify the true costs and benefits of our energy efficiency projects. With us today is Susan Rochford, Vice President of Energy Efficiency, Sustainability, and Public Policy at Legrand, and Aaron Bromage, Director of Finance for our Electrical Wiring Systems Division here at Legrand. My name is Lindsay Chapman, and I'm a Sustainability Analyst also at Legrand, and your moderator for today's webinar. If you have any questions, please feel free to type them in the chat box at the bottom of the GoToWebinar dialog menu. We will stop periodically throughout the webinar to answer those questions. With that, I'm going to turn it over to Susan.
Thank you, Lindsay, and welcome everyone. I'm very excited to share Legrand's project evaluation tool with you here today. This tool was developed as part of our efforts to significantly reduce energy intensity across our North American facilities. In fact, as part of the Department of Energy's Better Buildings, Better Plant Challenge, in 2 short years, we've reduced our energy intensity by 20.2%. This project evaluation tool can be used by you or your organization to develop and implement energy and cost savings projects. We're committed to sharing additional tools and resources on an ongoing basis. So please make sure you check our website frequently, which is at www.legrand.us/sustainability. Today, we'll briefly explain who Legrand is and what we do, share the project evaluation tool and 2 examples of how we've used it, and tell you how to get more information on this and other energy-saving tools and resources. So first, I want to tell you a little bit more about who Legrand is. Legrand North America is part of the Legrand Group, a global organization located in more than 70 countries. We've been a leader in the building industry for more than 100 years. Our electrical and network infrastructure product systems and solutions reach from the rooftop to the parking lot and work together to create more sustainable, high-performing buildings. We have a portfolio of well-known product lines, including Cablafil, ElectroRack, OnQ, Ortronics, Pass and Seymour, Vantage, WattStopper, WireMold, and Middle Atlantic products. Here on the left side of the screen, you'll see some aspects of our current energy profile, with more than 1 million square feet of office, manufacturing, and warehousing space across North America. Not only do we manufacture products and work in facilities that are focused on saving energy, we're also using our own products as part of our efforts to reduce energy intensity. For example, we use our own lighting controls, including dimmers, timers, occupancy, and vacancy sensors, to control energy consumption throughout our enterprise. By integrating these kinds of lighting controls, up to 80% of the electricity used for lighting can be saved. Our office spaces utilize WattStopper isolate sensors and have reduced plug load, meaning energy consumption at the device level, by an estimated 40%. For our IT systems, we also utilize data cabinets that are specifically designed to enhance airflow management, thereby reducing cooling costs. In a data center environment, these kinds of applications can reduce cooling costs by up to 60%. We design and manufacture these products to help our customers achieve their energy savings goals. As I mentioned earlier, we are part of the Department of Energy's Better Buildings, Better Plant Challenge. We have 3 major goals as part of this initiative. First, to reduce our energy intensity by 25% in 10 years across our U.S. facilities. Second, to implement a showcase project at a single site and achieve a 10% energy intensity reduction in just 2 years. We chose our West Hartford, Connecticut location, an 83-year-old, 263,000 square foot multi-use facility that also is home to our North American headquarters. And third, we want to demonstrate to our customers, suppliers, and peers that our success can be replicated. We are committed to sharing our learning, which is what we're working here to do today. These aggressive goals have compelled us to have to do things differently. So we developed a focused and strategic effort to reduce energy intensity, and this has involved a number of initiatives, including creating a corporate energy policy, developing an energy management handbook, and establishing cross-company employee teams to work together to achieve our energy goals. As part of this effort, we've also developed this project evaluation tool. This tool allows us to do a number of things. It helps us arm site leaders with a uniform approach to evaluate potential energy projects. With no full-time energy management staff at our sites, we need to equip the site managers and finance personnel with an easy-to-use tool. It also allows us to have a well-rounded view of potential energy savings projects, as the tool helps our people see both the financial, for example, return on investment, and the non-financial aspects, such as community impacts, of any given project. Finally, the tool also allows us to identify common energy savings projects across all of our facilities creating a repository of best practices within our organization, and providing an opportunity for potential shared procurement activities. Now Aaron Bromwich, as Lindsay mentioned, our Director of Finance for the Electrical Wiring Systems Division, is going to show you two examples of how we've used the project evaluation tool. One is a simple machinery upgrade, and the other is a large lighting retrofit of our distribution center, where we used our own watt-stopper lighting controls. You'll see each project's 10-year impact as well as metrics needed to justify the investment in each case. We'll be sending you a blank version of the project evaluation tool after this webinar that you can adapt to suit your particular circumstances and organization. I'm going to pause here and ask Lindsay if there's any particular questions at this time.
There are no questions at this time, and I'll hand it over to Aaron.
Thank you.
Thanks, Susan. Okay, go ahead, Aaron.
All right. Thanks, Lindsay. Good afternoon, everybody. So as Susan mentioned, we developed this tool and have been using it for, I'd say, about a year now. Let me shrink it down a little bit to make sure that it's fully visible. And one of the big reasons, as the finance director here in West Hartford, one of the reasons why I saw a need for this is when people would want to do a project, we would fail to capture the total cost of ownership of the equipment or the project, whatever it was, and it became very difficult to fund projects that you just knew kind of intuitively were good projects and had good payback, but they weren't able to show it on paper. So we created this tool to make sure that we brought in a lot of information that wasn't getting factored into our decision making, both good and bad. I saw bad decisions being made, where we might pick something that's more expensive in the long run, and then also I saw bad decisions being made where we weren't making good investments at all because we weren't taking into account the total cost of ownership. So with that in mind, we created this, and I will just go ahead and start walking you through an example of one of the projects we used this form to fund. So first of all, I'll just note real quick, we want to enter all of our dollar amounts in thousands of dollars. And if you can tell, or if you're colorblind like me, you might have trouble, but the input fields are all shaded blue. So if there's a field that's white, it doesn't require anything to be entered there. It's a calculation. If it's blue, then we're looking for data. And then also, as in here in giant red bold print, we want to enter cost reductions as a positive number, and we want to enter incremental costs as a negative number. So we'll enter a brief description so that, at some point as we post and share these files with each other here internally at Legrand, whoever pops into this and checks it out, they know a little bit about what the project was, get a little bit of background, and they can determine, is that a project that might work in our facility? So this project was for us to install a small air compressor in our factory here in West Hartford. We have turret presses that are programmable and run overnight and on weekends. And prior to the small compressor, we had to run our main compressor basically 24 hours a day, 7 days a week. And obviously we were using a lot more electricity to run that main compressor than we needed to with just the one machine being used. So we entered our description. This one was originally filled out by our site energy manager here, which is Mr. Bill Luchon. You can see that once I entered Bill's name, it's asking me here for Bill's phone number. So I'll pop that in here. Again, so that we're entering this data again, so that internally here within Legrand, we do make these available to each other by site. So if I were from a different site, now I can pop in and I can say, okay, I'm going to call Bill and get a little bit more information about this project. We implemented this project in June of this year, And it was a capital item. It was a machine. It was capitalized. So $6,000 was the amount of the investment. And you'll note, again, I've entered it in thousands of dollars and negative because it is an investment. Now, we go down through here. There are some notes on items to kind of explain to folks what it is we might be looking for. For instance, capital expenditures. A lot of folks that might be filling out this tool might not know, is this item going to be capitalized or not? So what I'm trying to do is direct people to where you might get these answers. So obviously in this case, you'd probably want to check with your accounting department to find out, is the $6,000 machine something we would capitalize or not? In this case, there weren't any additional costs related to this project. So in this line, you might have things like the cost of light bulbs, the cost of a machine that's not going to be capitalized, installation costs if you were bringing in an outside vendor or third party to help with the installation. Those are the types of things you would want to enter on this line. And it does make a difference to have the cost on the cap line or on the non-capitalized line. It will make a difference in how the returns and the financial impacts are calculated. Again, on this line, so fixed asset disposal, that's also going to have an impact on our results if we list a line here. But basically, what we're looking for there is, do you have an asset that has a book value on your ledger? And if so, when you replace it, you're going to have a financial impact. There's going to be a write-off. So we want to enter that on that line. Disposal of a current asset, if we're throwing an old machine away or disposing of an old air conditioning unit, that kind of thing, there probably is going to be a cost associated with the disposal of that. You know, a lot of these costs could be consolidated onto one line if you chose. But one of the reasons why we wanted to list all these things is to just kind of spur people's thinking and you know, maybe get costs in here or benefits into this tool that you might not think of otherwise. So we want to make sure we're really capturing the total cost and the total benefit. Next, if there's any internal labor that you want to capture, if you think it's going to be significant, if say your facilities department is going to spend, you know, 100 hours or, you know, 20 hours of overtime working on something, you'd want to capture that here. Any tax credits or deductions would be entered on this line. And another common line item that you would have is utility rebates. A lot of these projects offer utility rebates, so you'd want to enter those here. Again, if we had a utility rebate in this case, we'd want to make sure we entered that as a positive number because it's a good guy, it's a cost reduction, so we would enter that. And you can see now my upfront costs have been reduced to $5,000. So next, we want to enter our reduction in electricity usage. In this case, you know, our compressors do run on electricity, so we're going to have a reduction in our consumed electricity. We're not going to have any impact whatsoever to our natural gas usage here in West Hartford. So our calculation was that by turning our main compressor off on weekends and on the overnight, that we would save approximately 70,000 kilowatt hours per year. Now you'll notice that unlike the dollars, I am entering this in whole kilowatt hours as noted here. And the same thing if you do have a natural gas reduction, we want to enter that in whole CCF of natural gas, which is typically how they're billed. So that should make it a little bit easier. We want to enter our current rate that we are paying for electricity here on site, so 16 cents per kilowatt hour. You do want to make sure that you use the total rate. At least at our facility, we pay a different vendor for the electricity, and then we pay the power company, the local utility, for the delivery charge. So if that is the case for you, you'll want to make sure that you add both components to the cost there to fully capture the savings. And then you can see then down here, having entered that reduction in kilowatt hours, now I know what my change in MMBTU is, which is just a way of making common your units of electricity and natural gas. So when we talk about our Better Buildings, Better Plants challenge that Legrand is participating in, the goal is an MMBTU reduction, not necessarily an electricity reduction or a natural gas reduction. So MMBTU is a way to just combine those two components into our whole energy consumption. And next line, I'm getting the impact on our carbon intensity, which is to say our metric tons of CO2 that are emitted based on this project. So we are going to take about 50 metric tons of CO2 out of the atmosphere per year by eliminating the need for these 70,000 kilowatt hours. I'll show you quickly here that within our tool, we have a pull down here for you to list where your project site is. That's because there are different factors based on the part of the country that you're in, you know, the amount of carbon that is emitted to produce the electricity in your area. For instance, here in the Northeast, we have a lot of nuclear and a little bit of water up in Syracuse with Niagara Falls. So you can see that when I select the Northeast, all of a sudden that CO2 emission, it drops to 36 metric tons. However, if we were doing this project in, let's say, the Midwest, it's 45, where there's a lot more coal being used. So you want to pick that for your area. We'll pick the Northeast again. And then here I've got my cost savings, which is a pretty simple calculation. It's just taking our kilowatt hours saved times the 16 cents per kilowatt hour. Now there might be other items to list here. A productivity impact, for example. If we bought a more efficient machine, it might, you know, we might save labor, for example. We'd want to capture that cost here. You know, conversely, we might have a negative productivity impact. So either way, you want to make sure that you're capturing that cost or benefit. Ongoing utility or rebates, credits that you might be receiving on an ongoing basis, you'd want to include here. And then kind of a catch-all line here, any other annual expenses or benefits that, that you might know about as a result of the project. One of the things to take into account as well that's not a simple straight calculation like this reduction in electricity usage. If you're going to be reducing your overall peak demand, you might have rate savings. That's a common thing that we see in some of our projects. If we're able to significantly reduce our peak demand for electricity, we see you know, an overall benefit, not just the benefit due to that simple reduction. So down here, line 41, I'm going to get the sum total of all my annual savings and expenses. So you can see we're going to save about $11,000 a year on this project. I do want to, because this was a capitalized machine, I'm going to capitalize that and depreciate it over 10 years. So if you're not certain, you know, what the life of the asset would be, again, you'd probably want to just contact your accounting department, and I'm sure they'd be able to provide guidance. We want to enter a discount rate, so we'll enter 8%. So I want to just mention, because it did come up as a question with our first webinar, people wanted to know, well, what's the discount rate? So the discount rate, it's a percentage that we're going to use to discount our future cash flows. And so what we're doing there is saying, first of all, there is a time value component of money. So $1 today is worth more than $1 10 years from now, because I could put that dollar in the bank and earn interest. I can invest it elsewhere. So there is a cost to money. So we're going to take that into account first of all. And then secondly, what that discount rate also does is we're talking about future cash flows that are, you know, in this case, as much as 10 years out in the future. So there's some risk and some uncertainty in that investment. So that's the other part of your discount rate. So part of it, again, is to take into account the time value of money, that money is more valuable today than it will be in 10 years. And then secondly, to kind of account or add a little bit of a fudge factor, if you will, for the risk and uncertainty of our investment. So now let's take a look at the financials here. You can see we've got a net present value of $69,000. So a very simple rule of thumb, if your project has a net present value that is positive, that's good. And it would say do the project. It means that the discounted, using this discount rate, these discounted future cash flows minus our upfront investment cost is positive. So in other words, we're going to make more than this cost us. If it were negative, we'd say, well, the cash flows or the benefits that we're going to reap in the future isn't enough to recoup our investment. So that's just a simple rule of thumb there. So we have a good net present value on our investment. We have a discounted payback. So again, looking at these discounted, the discounted cash flows as opposed to the straight cash flows, but it's less than a year. So that's an outstanding payback. You can see just visually, you know, we have about a $6,000 investment. We got about $11,000 in savings. So, you know, pretty easy to say, yeah, that's going to be about a half a year. When it takes multiple years, you're not seeing here the discounted cash flows, so, you know, it's not going to be as intuitive, but this will give you the discounted payback as opposed to the straight payback. And then finally, our last financial metric that we're using here is internal rate of return, which in this case is 187%, which is really outstanding. And let me just explain to you quickly what internal rate of return is, because it's a term that non-financial folks are probably not real familiar with. So the difference between internal rate of return and a simple return on investment is that internal rate of return, or IRR, is going to take into account the timing of cash inflows and outflows. So let me explain that in a more simple way. If you invested $100 today and that investment grew to $110, you would say that the return on investment was 10%, which is pretty simple to understand. Most folks recognize that, and you can see that in your own banking or your own investments, 401ks, et cetera. But if it took you 10 years to get that $10 return, or 5 years to get that $10 return, that's going to make a pretty big difference to you in terms of selecting how you want to invest your money. So that's what IRR does for us. So instead of just giving me the simple metric of, hey, you made 10% on that, well, I want to know, what did I really make per year, so I can compare different investments that span multiple lengths of time. So IRR in this case is basically telling me, if to match this investment, I need to be able to invest and make 187% on my dollar per year. Obviously, that's going to be pretty tough to do. And I'll say we find that there are a lot of projects in a facility, especially if you're kind of at the front end of your sustainability curve. There's a lot of low-lying fruit where for small dollar investments, you get a really big return and a really big IRR as a result with a really quick payback. So those are the financial metrics. Oh, I should have put in here a tax rate. Just put in 35%. So that you can see that just changed some of my metrics there. So we'll move, though, from now the financial metrics into some more intangible qualities and subjective questions that we like to capture here. So first of all, you know, we are an ISO 14001 certified site, and so that's one thing that we want to note on our form. I believe it is a requirement of ISO to do these types of evaluations, or it's something that they like to see, and stating that is something we want to capture as well. So we're asking always, and again, this is probably more for the folks who might be evaluating the project on down the line, but we want to know, has this been reviewed with a technology subject matter expert? If I'm making the decision on whether or not to fund this project, and Bill has brought this to me, I probably want to know if Bill had any help in this, you know, somebody that might be more of an expert in the area. So we'll say yes in this case, and we'll say it was Larry. Next, is this project a statutory requirement? Well, if the answer is yes, we're probably going to do this no matter what. In this case, obviously, it was not a statutory requirement. Does it reduce energy intensity? Yes. Does it reduce carbon intensity? Yes. Does it reduce water consumption? In this case, no. Also, for ISO purposes and our own purposes, the sustainability team did create this, obviously. We want to know, has the environmental impact been considered? So in this case, yes, and it was Larry once again. And we see little to no incremental harm to the environment by using this. It will reduce electricity and reduce our carbon footprint. And then again, you know, this section below, it's a little bit subjective, so you know, you're going to have to use your best judgment if you're filling this form out. But we have a series of questions that we're going to ask and enter kind of a value between non-applicable for the project, or it'll have a low impact, a medium impact, or high impact. So does this eliminate a physical hazard? I'll say not applicable. Does it reduce scope 1 or 2 greenhouse gas emissions? That will have a high impact. We saw it takes almost 50 metric tons of CO2 out of the air per year. Does it improve the indoor air quality? I don't think so. These are electric after all, so they're not running on gas or some other type of fuel or internal combustion. Is it viewed as progressive and positive? I'd say, yep, we'll say that's got a medium impact. Would it be used in a future product offering? For us, being in the electrical industry, you know, some of the solutions that we might implement might be something we would roll out as a future product offering. In this case, we don't probably plan to get into the small compressor business, so I'll say no, not applicable. Would it contribute to energy rating? I'd say that could have a medium impact. A pilot for potential future scale, again, I would say there's a medium opportunity there for impact. What this means is this project something that we would see as a good pilot project that we might roll out to additional Legrand sites? So again, you know, if we saw success here in West Hartford, we'd probably want to share this as a best practice with some of our other manufacturing sites. Will it have a positive impact on the local community? I'm going to, you know, leave non-applicable there. It's not going to improve our power quality. I will say, though, that we might have a low impact on our energy independence, as it is reducing our overall need. Could make it easier for us to provide our own power through the use of you know, solar or geothermal or perhaps a fuel cell on site here. Does it increase productivity and engage employees? I'll say there's a medium impact there. And will it showcase our product? In this case, no. Again, we didn't make this, but we do have a lot of projects that do use our own company-made products. Will it have high customer and or media visibility? I'll say non-applicable in this case. Was it developed with a strategic business partner? Not in this case. And finally, it is not linked to our forward marketing strategy, so that's an NA. And we do have one more catch-all line here. Are there any other potential negative impacts related to this project? And if so, then we want to have an explanation on that. So I'll scroll back up, and we can see that we got a score here from all of our intangible questions of 14. And the question does come up, you know, what's a good score? Well, I'll tell you that the total possible points is 49, but it's very unlikely that you'd have a project that would reach that, just because for all of these things to be true, it would be pretty difficult, I think, to have one project that could accomplish all of these things at the same time. So the project that I'll show you next had a score of 25, which I believe is about the highest score I've seen so far. So let me go ahead and transition over to that. So this project was completed in our Fort Mill, South Carolina distribution site, our warehouse down there. And the project was a lighting retrofit, which we ventured into with a third-party consultant that came in and helped us and did a lot of that work. So we replaced 938 units in the warehouse. Each unit incorporated a watt stopper high bay sensor so that the lights could be controlled for each specific unit area. And we also replaced the bulbs and went to T5 bulbs in all of the units. So basically, as a section of the warehouse is not currently occupied, the lights are out. And as you move about through the warehouse, the lights come on as you move into a new section. But we'll see how that had some pretty dramatic savings. So this project was implemented last fall, and the total cost, including the cost of our sensors, the installation cost, and the bulbs, was $234,000, which we did capitalize, and with a fixed asset life of 10 years. We'll leave 8% as our discount rate and the 35% for our tax rate, and we have selected the Southeast for our project site. And I'm sorry, I failed to mention on the previous one, we do have a section here for what type of project this is, and here obviously we have selected lighting. And with this project, we estimated a savings of about 2 million kilowatt hours per year. It's pretty sporty. And we've got in here 10 cents a kilowatt hour. You know, in this region, in South Carolina, the electricity rates are actually very low, which is a good thing, except that it kind of reduces the amount of savings, obviously, because we're saving on something that's not as expensive as it might be at some of our other facilities or maybe at your own facility. There was no impact on our natural gas consumption, so we've left all of that blank. And we can see that that 2 million kilowatt hours reduced is almost a 21,000 MMBTU annual reduction, and 1,200 metric tons of CO2 will be removed from the atmosphere as a result of our project. And I have energy cost savings of $200,000 per year. So we've got on this project a net present value of, you know, $750,000 and a discounted payback of 1.3 years, which is really outstanding, and an internal rate of return of 68%. So it would be probably pretty tough for us to take that $183,000. I'm sorry I didn't point out to you there was a tax credit which was available to us for this project, which we utilized. So our net investment was $183, but would probably be pretty tough for us to take $183,000, invest it, and get a return of 68%. So this was a really good project. You can see again, you know, the score from all of our intangible questions was 25, which, you know, while about half of the total available, that is a, you know, for the projects that I've looked at, it's a pretty good score. So when you pair that with the financial metrics here, this project's kind of a no-brainer. So we'll go quickly through how we answered some of these questions, but did we review it with the technology with a subject matter expert? We did. You know, in this case, we had an outside company, a lighting consultant that came in and helped us with the project. Some of the other questions that, you know, we would see here that were good. The environmental impact, for example. You know, I probably should have fleshed that one out a little bit better, but in addition to the impact on our carbon footprint and the reduction in electricity usage, this with this project, we did make sure that we had a procedure in place to dispose of the old light bulbs in an environmentally responsible way. Some of the other impacts here that we might not have seen in the last project, again, we do have the potential to roll this out on a bigger scale to our other facilities in our doing so. But also, for us, will this showcase our products? Yeah, definitely. And does it have customer visibility? Yes. So those are some of the things that were maybe added benefits to us that, depending on your company and what you do or don't do, those are things you would probably want to take into account if you're able to, showcase your own products. Obviously, there's an intangible benefit to that, so you want to make sure that you capture that. And so that's one of the reasons why we look at the intangibles in addition to the financial issues. So that's about all I had on the tool. Lindsay, if there are any questions?
Yeah, there are a couple questions. The first one is, I see there are hidden rows. What are in those rows?
Okay, good question. So there are hidden rows here. I've got a little toggle box just so that it makes it a little more obvious to folks that there is. It's really hidden because some of our non-financial folks here didn't want their heads to explode. But if you are interested in the tool, we're sending it out to you. You're able to explode this, and you can see the calculations. That's basically all that is hidden here, is how we're getting from these inputs up here down to these answers right here. So, if you wanted to customize this, or if your company had different metrics that you wanted to incorporate or tweak, then you could certainly do that here. But again, just didn't want to kind of muddy up the water by showing everybody that inputs the tool. Didn't want to scare them, so that's why we have those hidden. But it is not locked away. It's easy enough to access.
Great. You might have answered this one already in the last one, but the second question is the tool locked, or is it customizable to our own site-specific conditions?
Right. So there is nothing that is password protected or locked or anything in this workbook, so it can be updated by the user. I could go in here and I can change that formula if I want to. Obviously, for that purpose, you probably want to keep a master copy somewhere in case a user does get in. If you have yours on a common drive, for example, that folks are able to access, you might want to just keep a clean copy somewhere else to make sure that you can always go back and have the original version in case somebody makes a change inadvertently. Could be just a lot easier to do that. I will also point out real quickly, so in this sheet, if you wanted to change the scoring, for example, on what the answer here of having a high impact, we've said that has a point value of 3. If you wanted to change that and make it 5, you can change that very easily and do so. If you wanted to add project types or change the project types, you can do that there as well. And then you can see there's a little table here. This is where I'm getting the build margin emission rates that are used to calculate your carbon footprint impact, and you can see it by region here. These are rates that are published by the Department of Energy, U.S. Department of Energy. So they'll call it a NERC region and give you a sense of what that region means. So Alaska is ASCC, and you can see there's also a map here that has those regions listed. So you can kind of see when we talk about the Northeast, if you're not sure what would or would not be included in that, you can see the states that are included in the Northeast.
Great. The next question is, you mentioned having a site energy manager with numerous locations. What is the organizational structure in place to utilize this tool? How is it passed off between employees?
Okay. So let me try and address that kind of one by one. So site energy managers, I would say that at each site we do have someone who is designated as being the site energy manager. I can't think of one site where there is somebody that is their job exclusively. So generally these are folks who are wearing multiple hats. So in the case of here in West Hartford, our site energy manager, Bilushan, he does have other responsibilities, but I would say maybe half of his job is to track our energy usage, report on it, and to find opportunities like with the small air compressor for us to save energy. Also, Bill would be the guy for us who would work with the utilities on projects and have them come in. We've had audits done by third parties, which are generally free and available to you if you reach out to your local utility. So Bill would be the guy that would work with them on a project like that. Second part of that question, Lindsay, was?
How is it passed off between employees?
Right, correct. Okay, so we utilize a, I don't know if you'd call it a software or a service, whatever you'd call it, but SharePoint, which is a web-based system where we can provide access to internal folks and possibly external folks, but we can create a basically a website and distribute a link to it and enable people to go and access it, and that's where we make available files like these. So we have on there both the original template that people can download and use, but then also each of our sites within Legrand has a section in there to upload these tools for the various projects that they are considering or have implemented. And again, the really nice thing about that is that's a good way for these site energy managers to go out and steal shamelessly from each other and see where there might be opportunities to to kind of piggyback off someone else's research and work. So that's generally how we disseminate it across sites. And then within a site, it wouldn't be available exclusively to the site energy manager. I mean, the finance folks, the other engineers, people like that, would certainly have access to it. And personally, I've sent it on to a few of the internal folks here when I knew they were working on a project, and I wanted to make sure that they used something like this to make sure they made the best decision that they could make.
Great. Let's see. Next one is, can the life of project table be extended beyond 10 years?
You could certainly, with a little bit of work, do that. We have not. We just generally don't consider projects much beyond 10 years under any circumstance, whether it would be a new product that we'd be considering, or in the this kind of case, whether like a capital machine or a new air conditioner or something like that. But yeah, it could certainly be done. I don't think that it would take a great deal of effort. But I will also say that as you get out beyond 10 years and you're discounting cash flows, you will see that the residual benefit of that becomes less and less. Here, when I unhide that, you can see how that $200,000 of annual savings becomes worth less and less and less as we move out. So you would eventually get to a point where your discounted cash flow would be approaching zero.
Okay. And lastly, is productivity impact entered as a % or dollar amount?
We are entering it here as simply a dollar amount, but I have put into the embedded note here a way to quickly, or an outline for folks on how to calculate that. So you're going to want to take the number of hours to be worked, good or bad, whether it's a reduction or an increase, times the hourly labor rate for that employee. That's going to give you the wage, and then you're going to want to take the wages, add in the increment, or not the incremental, but add in the benefits rate for that employee to get a fully burdened cost of the employee. So.
Great. Well, that's all the questions we have today.
Okay.
If you want to go to the last slide.
Yep. So we just want to thank you all for your time this afternoon. Again, we will be sending out an email which will include the tool, and we would urge you to come to our home page, and you can see that tool and some other tools that we have, and keep checking back for additional updates. There was a question the last time about water savings or reductions in water usage, for example, whether we were going to incorporate that into the tool or why we didn't. And we discussed that as a team months ago and decided for now, because of the Better Buildings, Better Plant Challenge, we wanted to focus more exclusively on energy. But, you know, as we move forward, you know, that's the kind of thing I would anticipate that we might incorporate into the tool or develop a separate tool. And, you know, you can see down here below our website. So if you want to know more about Legrand products or our energy-saving products in particular, you can go to www.legrand.us, where to buy ASPX. I think that's it.
Thank you all for attending, and we'll be in touch shortly.